Good evening, everyone. My name is Maurya Hanspal, and today we're going to talk about stock markets. What exactly are stock markets? What are the various factors affecting the stock markets? The various dynamics of stock markets, and how has the stock market evolved over various periods of time? Stock market has been a very crucial topic and a trendy topic over the years, especially when this COVID-19 pandemic started. So, talking about the basics of stock market, I welcome you to the introduction session on stock markets. And this is going to be a live series for further sessions where we're going to also learn about various advancements in stock markets, various fundamental indicators in stock market, various technical factors affecting the stock market, and also the valuation exercises as well. So I welcome you again to the introduction session on stock markets. So before starting this session, let's firstly understand that what exactly are stock markets. For all of you who don't know कि stock markets क्या होती हैं, very simple. As the name suggests, stock markets. Any market in which the stocks are being traded, buying and selling of the stocks. And by stocks, I mean the shares of the company. And by the shares, I mean the equity shares of the company which are available in the market to be traded freely. Those shares are the free floating shares. That is, anyone in India or outside India, globally, I mean, can buy these shares or sell these shares. That is why these are the free floating shares, because these shares are available in the market to be bought and to be sold and to make profits. These shares are not locked in by the promoters of the company. The shares, which are the locked in shares by the promoters of the company, cannot be freely exchanged in the stock market. They cannot be bought or sold freely in the stock market. So one must try to understand this fact or this consideration that the shares which are being traded in the stock market are the free float shares and not the shares which have been locked in by the promoters of the company or the owners of the company. Right? Stock market, as we are talking about, I said buying and selling of shares. Now, in order to buy and sell those shares, you need a buyer and a seller, right? Two parties, counterparties. In order to buy, you need a seller. In order to sell, you need a buyer, right? And that is the one most important characteristics of stock market. That is the discovery of pricing. Pricing. Stock market helps to discover the appropriate price for the stocks because we have the buyers and the sellers, and the interaction between those buyers and sellers helps us to fix the price of the stocks. That is why the first most important factor of stock markets is price facilitation. Yes. So we're having some technical issues, I believe. Just give me 2 seconds. Yeah. So I think the technical issues have been solved here. So we are back here. There were some technical issues. So sorry for that. Yes. So talking about the buyers and sellers. So the interaction between the buyers and sellers helps you to establish a price. Okay. Yeah. So you need the appropriate numbers of buyers and sellers. So like this is a basic PPT or a PowerPoint presentation that is basically for the stock markets. But I would present it like sometime later. Let's first our basics be clear about the stock markets. Okay. So in the stock markets, firstly, as I was talking about, a buyer and a seller for the facilitation of the prices. And that is why stock markets helps in the discovery of prices, right? You need a buyer. Buyers are called the bulls. The bulls buy the stocks. And due to that, the price of the stock increases. Because where there is demand, the prices rise. The sellers, financially or technically called as the bears. When those people sell the stocks, the price of the share falls because they are the suppliers. An appropriate interaction between those buyers and those sellers. between those bulls and those bears helps in the appropriate facilitation of the equilibrium price in the market at which the stocks are exchanged. And exchange is done only on the basis of these demand and supply factors. That is the first most important criteria of a stock market. That is price discovery. Next, the second most important criteria that we can say is the liquidation. What do we mean by liquidation? So talking about liquidation is it basically means, are we able to encash our shares? Like for example, if we have purchased a certain amount of shares, we have bought the shares in the market. But when we are willing to sell those shares in the market, do we have a buyer for that? When we are selling those shares in the market, do we have an appropriate buyer for that? If yes, there is sufficient liquidity available. If no, there is no liquidity. So having the presence of both the buyers and sellers in the stock market, it helps to facilitate the as well as the price discovery as well as the principle of liquidation as well. Right? Yeah. So these were the basic two principles of stock market. One was the price discovery, and the second was the liquidation. The liquidity. There is a kind of liquidity in the market. Whatever we buy, we can sell, and whatever we sell, we can later buy. So these are the major two principles on which the stock market works upon. So that were a few of the basics of stock market that we can say. Right. So now let's talk about how the stock market has been evolving. And I would take the recent scenario of this COVID-19 pandemic that happened before. Okay, though it is still right now, some cases have been coming up, but talking about this pandemic. In this COVID-19 pandemic, when the market was all down, why the market was all down? Let's understand conceptually. Because the suppliers were more, the sellers were more, the bears, like which I talked about, the bulls and bears. In this case, the bears were more. They were selling their shares in panic, because they were afraid that the businesses could not do well. And in panic, we see a lot of the profit taking in the market. That is basically selling your shares at an appropriate time so that you people not have to incur a certain amount of loss on your shares, basically. So a kind of profit taking was taking place in the market, which further led to panic selling. Panic selling is excessive selling of the stocks that we witnessed in the COVID-19 pandemic. But what happened? A large number of investors, not basically the investors, I would say the non investors, the people who had not entered the market anytime soon, they started to enter the market at that time. Maybe just because of the advices from their friends, their families, or financial advisors. So, what happened? As we all read in all the financial management books, a quoted line: buy when the market is low and sell when the market is high. Though it is not always true, but as for now, let's take this assumption: buying when the market is low or when the bears are more powerful, and sell when the market is high, when the bulls are taking over. Okay, so these people started to invest in the market because at that time the price was very low, the valuations were very low. That is, the appropriate price of the stock, which could have been, was not there. That is, if the price of the stock could have been like 200 rupees, like for example, if the company is being traded at 2000 rupees, maybe, right? And not everyone can afford a single share for 2000 rupees. During that COVID-19 pandemic, when the market was down, that 2000 rupees ka share was being traded at maybe 1000 rupees or 900 rupees or maybe just 500 rupees. So in that case, I meant to say the market was undervalued. It was below the fair market value. And at that time, all those people who could not afford those shares, or the people who were interested to enter the market on that famous quoted line in financial management books, that buy when the price is less, they started to buy the shares in the hope that the market would rise in future. And when the market rises, they would sell off the shares and earn profit. And that is what we call as the profit taking concept in stock markets, right? They started to enter the market. So these were those peoples who started to have interest in stock markets also because they wanted to have a passive income. Now अब मैंने passive income बोल दिया, अब आप पूछेंगे कि what exactly is passive income. So let me talk about the difference between the active income and the passive income, like before going further. So active income is something that you earn from your primary or principal job. Like for example, if you are working in a company A and providing your professional services in that company, and the salary that you earn will be your active income because that is your main source of income or the principal source of income. But if you start earning from those sources in which you do not have to work hard day and night, okay, you have to sit, you have to sleep and make money. In that cases, we call it the passive income because these are the secondary sources of income, the non-primary sources of income from which you can earn money. A lot of people lost their jobs in COVID-19 pandemic and started to rely also on this passive income, which was from stock markets, from securities, the equity shares being traded in the market, right? So a lot of craze, a lot of frenzy started to build up among the people, and people started to know about the stock markets, learn about the stock markets. So on one side, we have those people who started to take interest in stock market, who realized that if you have the knowledge about the stock markets, if you have the understanding about the stock markets, you can earn wealth as a passive income as well. But still, sadly, I would say there are some people who are still afraid to invest in stock markets. Why? Because they feel it is just a gamble. And gamble in the Indian context is not seen on a positive note because there are not certain good regulations on gambling. Gambling in many states, in many countries, is considered to be illegal. But I would emphasize on this point that stock market is different from gambling. See how? I would give you a small example. You go to do gamble or you have a lottery, or a classic example, you go to a casino, okay, to earn money, right? In a kind of a casino atmosphere, you invested like 1 lakh rupees in that casino round. And you were hoping if the number could strike at the right circle, you would earn 5 lakh rupees. Okay. You invested just 1 lakh rupees, not invested, you just put in your 1 lakh rupees in a casino because investment is a term that is more appropriate for stock markets, not a casino. You went to a casino, you put in your money, your 1 lakh rupees, within a hope that you will earn 5 lakh rupees. Okay, just imagine you won. You won. You won 5 lakh rupees. That 1 lakh rupees that you invested, and out of that 1 lakh rupees, you earned that 5 lakh rupees. Okay. So once you earn that 5 lakh rupees, you have started to become a bit more greedy. लालच आ गया. You will say 1 lakh ka 5 lakhs ho gaya, 5x, 5 times. That 5 lakhs you're gonna invest again in the market, not in the market, in the casino. Because you want 5 times or. 5 lakh ka 5 times or ho gaya मान लो. It became 25 lakhs, 25 lakh रुपए, right? But there is no guarantee that if you replay in casino with that 25 lakhs again, you will make 50 lakhs. It can happen, you put in that money, like 25 lakh rupees amount, in that casino and that turn to be zero in one go. That is a casino which is kind of considered illegal from many point of views. But when we consider it from the money point of view, the rate of losing your money is 100 times or 1,000 times more as the rate of losing money in stock markets. Because in stock markets, you can be cautioned, right? You can make some changes in your stocks. I'll tell how, right? In a case of a casino, you had like 25 lakh rupees. Okay, you invested that again, or you played that rupees, your amount turned to be zero. Because it is always wrong to be greedy. And when we are earning more and more money, we tend to be greedy and we sacrifice that money. We take more risk to get more return. And our level of risk was increasing. Investing 5 lakhs is a risk. Investing 25 lakhs, a bigger risk. So jitna zyada we are taking risk because we want like more returns. And that is like one of the major assumptions in stock market. The higher the risk, the higher the expected return. A lot of the students, they are confused. They say higher the risk, higher the return. It is not. It is higher the risk, higher the expected return, because it is not 100 or 1000% sure. अगर ज्यादा रिस्क लिया है तो रिटर्न मिलेगा ही मिलेगा. Your portfolio can even turn to be negative. Portfolio क्या होता है वो स्टॉक मार्केट्स में होता है, हम बात करेंगे उसके बारे में. So, like this was the case of a casino where you can lose your wealth, that 25 lakh of rupees in one go. You cannot do anything. But what happens in stock market? What happens in stock market? You can create a portfolio. Now, what is a portfolio? Portfolio, it includes the strategy of diversification. Now, what is diversification? A simple example. Let's take a simple example. If in this COVID-19 pandemic, if anyone had invested only in the hospitality sector, that is your travel, tourism, hotels, and all that stuff, the value of his stocks would have turned to be zero or negative. And you know why? Why the value of the stocks would have turned to zero or negative? Because no one was traveling in this COVID-19 pandemic. Everyone was afraid because of Corona. No one was traveling. Hotel bookings were at zero, right? If anyone only had invested into those travel and tourism stocks or the hotel industry stocks, like basically like we have companies, the travel and tourism, we have the Country Delight, we also have the Lemon Trees, and all these stocks. Like if someone had invested into it, the portfolio would have turned to be zero or negative, right? But if someone would have also invested into different industries, so this was the hospitality industry which I had talked about. If along with the stocks of the hospitality and the travel and tourism industry, which was going down and negative, bilkul khatam, if anyone could have also invested in the IT stocks, that is the information technology industry, because we know that IT stocks were on a boom. TCS, Infosys, Tech Mahindra, Mindtree, you name the company, and the prices were rising because we were all home, and the demand for these online and tech services was on. And even I can bet 99% of the people are watching this online, and we are on the YouTube as well, right? Online mode, your Google Meet, your Zoom call, and your Microsoft Teams, and various other platforms on which the students used to take their classes. That is just in case of education, but in case of larger corporates, that all the services were through the help of IT because everything went online. The pharma industry, I need not explain the growth of pharma industry. In the case of COVID and a pandemic like this, the demand for healthcare services rises. And the basic concept which I touched in beginning, when the demand is high, the price rises. The demand for the IT was high, the stocks of IT rose. The demand for pharma was high. The price of pharma rose. These industries started to do very well, extraordinarily well. So along with this, with the hospitality sector, if someone could have invested in the IT sector, in the pharma sector, his portfolio, that is called a portfolio, where you have different stocks from different industries. So that if one industry or a certain number of stocks are making losses, if certain number of stocks are going into negative or going into zero, the other stocks are doing well. It is better to have a small amount of a positive return rather to have all zero or all negative. And when the amount that you invested becomes all negative, that is the erosion of your wealth. Capital erodes. Khatam. So again, same point. If apart from this travel and tourism industries, you would have invested in IT and pharma, so the travel and tourism in the portfolio is going down, these IT and pharma industries who gave returns more than 100%, more than like 150% could have sustained. And still your portfolio would have been positive instead of being negative or zero. And that is the strategy of diversification in we create a portfolio, having stocks of different industries. अगर ट्रैवल टूरिज्म नीचे हो गया, वी हैव आईटी, वी हैव फार्मा. एग्जांपल एक और, फास्ट मूविंग कंज्यूमर गुड्स इंडस्ट्रीज, FMCG. The demand for these industries tends to be constant, even rises as well, because these industries are for like day-to-day items, ration, right? Like as we call in Hindi, be it a pandemic, be it not a pandemic, people would be buying their groceries and ghar ka ration and all that stuff, right? shampoos, your soaps, your like some basic cosmetics, right? So all these things still happened in COVID, and even the demand for these increased because people started hoarding them. Because of the fear कि आगे जाके cases ना बढ़े, they tried to buy it in bulk, and that is why like there was a shortage also. And जहाँ पे scarcity होती है किसी चीज की, when you have scarcity, the basic concept of economics, when you have scarcity, the price of that commodity it rises, right? So scarcity create हुई for the fast moving consumer goods, FMCG industry stocks, and the price started to rise. So FMCG can be a good thing in your portfolio, which I believe, which it tends to be stable in different cycles of the market. And by the cycles of the market, I believe sometimes the market can be on a high, sometimes the market can be on a low, then high, then low, then high, then low. So that is basically a cycle of the market, and I am explaining you in the simplest terms possible for all the beginners here. Okay, so you can have this pharma, and even the demand for pharma it also tends to be constant. Pandemic ho, चाहे ना हो, ठीक है. Even the IT industries are good to go, but this travel and tourism industries like they get hurt. Even the real estate industry is a cyclical industry. Sometimes it booms and sometimes it falls. Over the past 8 to 10 years, this real estate industry has been on a constant basis on a consolidation. By consolidation, we mean the price is not rising much high और neither the price is falling. ठीक है, एक सेम पेस में चल रहा है. अगर 200 का प्राइस है 220 200 एंड लाइक 180 200 220 180, तो ना तो ज्यादा बढ़ रहा है और ना ज्यादा कम हो रहा है, एक सेम पैटर्न में रह रहा है. सो दैट वी कॉल इट एज अ पीरियड ऑफ कंसोलिडेशन in stock market. Okay, so that is a consolidation. So you need to have stocks from different industries, right? You need to have stocks from different industries. Hospitality, you can have pharma, IT, FMCG, the real estate, the banking sector, and the metal industries. You need to have certain kinds of stocks from these industries, right? And it should be inter-industry diversification, not intra. अगर हम सिर्फ हॉस्पिटैलिटी में कर रहे हैं इन्वेस्ट, तो ट्रैवल टूरिज्म एंड होटल्स, दैट इज एन इंट्रा इंडस्ट्री डाइवर्सिफिकेशन, बिकॉज यू आर इन्वेस्टिंग ओनली इन वन इंडस्ट्री. पूरी इंडस्ट्री एक स्टॉक, मतलब अगर लाइक पूरी इंडस्ट्री गिर रही है तो बाकी स्टॉक्स भी गिरेंगे, राइट? So you need to have an inter-industry, that is investing in different industries, be it pharma, be it IT, be it fast-moving consumer goods, be it your banking sector. Even the non-performing loans of the banking sectors are falling nowadays. अब non-performing loans बोल दिया तो इसका meaning क्या होता है? Non-performing loans और non-performing assets are basically जो लोग इन loans पे अपना like payment नहीं करते. Like for example, if I had taken a loan of 2 lakh rupees, and if I do not pay back my interest for a longer period of time, or maybe for 90 days, as per the RBI guideline, then that would be termed as a non-performing loan, NPA. Okay. So banking sectors you can keep, even the metal industry, the capital goods industries, all these industries can be contained in your portfolio. क्योंकि अगर एक सेक्टर नीचे गिर रहा है तो बाकी सेक्टर इज राइजिंग एटलीस्ट, राइट? So that is the basic of stock market that we talked about. We talked about the price discovery mechanism. We talked about the liquidity. ठीक है, shares buying and seller हैं, demand supply है, bears, bulls, all these things you should know about stock market. How to have a diversification. Why to have a diversification? What is a portfolio, right? And one thing, see, in this case we can see, like if we continue the same example of portfolio, where hospitality industry was falling, but where IT and pharma were rising. So we can say there is an inverse relationship between the two, can't we? If one is falling, the other is rising. If other is rising, the first one is falling, right? That's an indirect relationship or inverse relationship. So isn't it good to have those stocks in your portfolio, or those industries per se, I would say, that have inverse relationship or negative relationship with one another? Isn't it? In terms of core finance, though I'm not here to bother you with core finance terms, but in terms of finance, we call it as a negative correlation. That is, if one stock is rising, the other is falling, and they're not at all related to one another. That's a negative correlation. Correlation is basically a measure of association. that shows you if one variable rises, the other one falls or rises or remain the same. I would repeat. Correlation is a measure of association that shows you if one variable rises, the other falls, rises, or remains the same. So if both of them are rising, it is a positive correlation, right? If both of them are falling, again, it's a positive correlation because they're going in the same direction and magnitude, because we're considered with direction and magnitude here. But if एक बढ़ रहा है, एक गिर रहा है, so that is a negative correlation or inverse correlation. Okay, so that is one concept you learn, and basically the correlation, it tends to be from 1 to -1. ठीक है, 2 3 4 नहीं होगी, -2 -3 -4 नहीं होगी, even -1.1 भी नहीं होगी and 1.1 भी नहीं होगी. ठीक है, it tends to remain between -1 and 1. So that is something about stock markets. Okay, so we need to have idea about different industries that make up the portfolio, right? So that is one thing. So on one side, we have those people who started to invest in the market because of this COVID-19 pandemic to have some passive income, whereas some people were still afraid and they compared this market with the casinos or gambling. So this perception must be removed, and that would be kind of removed only through financial literacy, which we'll talk about tomorrow. Okay, so stock markets. So continuing with stock markets, हम COVID-19 पे आते हैं वापस. Everyone started to buy the stock. ठीक है, because the market was all low, the valuations were all low, and valuation, I told you, अगर fair price 2000 होना चाहिए था, the price is being traded at 500 rupees or 1000 rupees. Okay, all the companies were down mostly. ठीक है, and I'm talking about the initial phases of COVID. Initial phases when it started in 2019, that March April phase. Even that time, IT and pharma was not on a boom. It started to boom धीरे 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 धीरे. Right? At that time, the market was all low, right? They started to buy those stocks. Those who had knowledge about the market, they bought those stocks which are good. Those who did not have knowledge about the markets, they bought anything or everything, right? Now, by good or bad stocks, what I mean? By good stocks, I mean the companies that can really sustain in future. The company that really have a growth potential. More than 3,000 companies are trading on Sensex. More than 1,800 people have been trading companies. Nifty. Okay, not all companies give you returns. And even a person who does not have knowledge on stock markets, he knows about it. Only a few of the companies give you returns. That is why we have Sensex 30, top 30 market capitalized companies, and Nifty 50, top 50 market capitalized companies. सिर्फ 30 सेंसेक्स में, सिर्फ 50 निफ्टी 50 में, आउट ऑफ दोस 300 कंपनीज एंड 1800 कंपनीज इतनी ही क्यों हैं? देयर माइट बी सम थिंग्स इन दिस कंपनी, दे माइट बी स्ट्रॉन्ग. दैट इज व्हाई द स्टॉक एक्सचेंजेस, SEBIs and different guidelines or different kinds of organizations who regulate these companies have included them, right? So that is the thing for these industries. You need to find that company. एंड ऐसा भी नहीं है जरूरी कि निफ्टी 50 या सेंसेक्स में हो ही. ठीक है, जस्ट डू नॉट टेक मी रॉन्ग इन दैट सेंस. बाय ओनली दोज कंपनीज हु कैन हैव अ सस्टेनेबल फ्यूचर, who can have a good future, who are strong companies, who have the profitability. At this time, we are not talking about the IPOs, which are loss making. I'm talking in general about the companies which are listed, which are being traded in market for a longer time. IPO की बात we'll talk in further series of stock markets. Okay. Not all companies are strong. Not all companies have the profitability. There are some companies who have the current profitability, but they cannot make the profitability in future. There are some companies who do not have the current profitability, but they can make the profitability in future. Two kinds of these things can be there. Whereas those companies were all loss making. ठीक है, तो देख के we have to invest. If a company has a future potential of making profits, if a company has a future potential of having cash with it, then go for that company. But अगर अभी है and future का potential है ही नहीं, so there is no need to invest, right? Because ultimately your portfolio would turn to be negative, right? So you need to, so at the base level of COVID-19, everyone was buying those stocks that were quite low in the market, right? And all the stocks were low, so people started to buy anything. They did not see that those stocks can give you fundamentally good return in future or not. Okay, they have the current profitability or not. ये दोनों factors देखे ही नहीं. And once from past 3 to 4 weeks, we are seeing the fluctuation of the market. From 60,000 plus, it went down to like 57,000 and something. Why? Because those companies, apart from the concerns of uh, like like the new cases of virus, which I'm saying, apart from that, which people say is like one of the reason for stock market to go down, like one of the most important reason was higher valuations, right? Higher valuations, it is the opposite of lower valuation. अगर 2000 पे ट्रेड करना चाहिए, अगर वो 3000 4000 5000 पे पहुंच गया, तो a one time will come when that 5000 would come back to 2000. And that what happened in stock markets, because there was relentless buying. And जब buying होती है, the price rises, right? जब buy करते हैं, the price rises, and that is one thing you know. So at this time, those prices have started to fall because the most of the companies have reached their peak, the higher valuations they have reached in stock markets, and now they're tending to fall. Also because of the concerns of the Omicron virus, and also because of the higher valuation, because the peak has reached. Okay, but those companies who are strong, who are stable, like before this pandemic also, were stable in this pandemic also, and will remain stable after this pandemic also. They were kind of affected in a less way. And even if they are affected, they will bounce back very soon. And those companies who had no profits, companies who had no future, no sustainability, no cash flows, those valuations came down to almost zero or negative. So that is one thing people made a mistake when the market was kind of bottoming out in COVID 19. They could have invested only in those stocks which had a future value, a future sustainable growth, maybe profits, profits से ज़्यादा cash flows की हम बात करेंगे हम आगे की सीरीज में. If they had that much, they could have, and stock market इतना फिर effect नहीं होती, because they could have invested only in fundamentally strong companies which have a future sustain instead of buying anything blindly, right? So some of the things like which we tend to read, like in this slides, like some of the things which we tend to read in the annual report of the company, like the profit and loss statements, if we get to know about the profitability of the company, कि profit make कर रही है या नहीं है. Balance sheet से we get to know you have the assets of the company कितने हैं, कितनी liabilities हैं. Obviously assets what we own ज़्यादा होने चाहिए as compared to the liabilities that we owe. कैश फ्लो स्टेटमेंट्स कैश है या नहीं है, ठीक है. दी ऑडिटर्स ओपिनियन, बेसिकली दोज पीपल हु आर सीइंग योर एनुअल रिपोर्ट कि ठीक बनाई है या नहीं, राइट. द कंपनी मस्ट हैव डाइवर्सिफिकेशन एक्सपेंशन प्रोजेक्ट्स, मतलब फ्यूचर होना चाहिए कंपनी का. द कंपनी इज डूइंग समथिंग इन फ्यूचर. द कंपनी हैज अ गुड मैनेजमेंट एंड सम गुड काइंड ऑफ प्रोडक्ट्स इन द कंपनी, तो वो सब कंपनी में है, राइट. So all these are some of the factors which you should know, and these are just like 1% of the factors. We'll talk about these factors in detail later. आज नहीं, later. ठीक है. But by those companies which are strong, who have the future, कैसे strong है, why strong है, हम उसकी बात करेंगे. But क्यों strong है, we need to look at this fact. ठीक है. Buy only those companies that are strong, right? मैं तभी मैं बोल रहा था. It is not always good to buy when the market is low. Financial statements की books में we have a quote, buy when the market is low and sell when the market is high. But it is not always true for all the stocks. Buy the stocks, I believe, buy the stocks when the market is low, only those stocks which are fundamentally strong. And do not sell the stocks when the market is high, even if your stocks are fundamentally strong. Okay, buy and buy. And only sell the stocks at a time when there is some certain emergency or you need those funds only, or you have a certain goal, maybe like you want to buy something or pay off the loans from 10 years from now or 20 years from now. Until and unless, do not sell those fundamentally strong companies. So buy companies when the market is low, which are fundamentally strong, and do not sell the companies even when the market is high, even when everyone around you is selling those companies. Do not sell those fundamentally strong companies, because when the market would come up, when the market would go high once again, that company would give you 20, 30 times more return than the final or like the previous price of the company at which you bought it. Okay. So that one thing you need to have idea about. Okay. People were buying anything नहीं करना. Fundamentally strong देखना. And buying anything when your friends are buying, families are buying, and news report are here because to like buy the shares and कुछ भी खरीद लो, that is certainly called as irrational exuberance. What irrational exuberance? That is, you are not seeing the fundamentals of the company. That is how strong the company is. Future है या नहीं है, but you are buying that company. That is irrational. You are not behaving as a rational investor or as a rational person. You are buying anything in the market. So that is an irrational exuberance. Without seeing the strength of the company or the fundamental strength of the company, you are buying anything in the market, being irrational exuberance. Okay. So that is one thing we talked about, the basics of stock market today. What exactly is the stock market? What is prevailing in the stock market? The different factors, conditions affecting the stock market, and how to choose a company. Though we talked just 1% how to choose a company because that's a very vast topic which we'll cover in the subsequent sessions. So that is one thing which all of you got to know about how you can actually have an idea about the stock market, when to buy, when not to buy, or to hold it forever. Okay, so that was all for today in this session about stock market. And now I'll take a leave. And now I'll take a leave with all of you. And I'll meet you tomorrow for my session on financial literacy, which is a very important session for all the youth. Okay, all the college going students, even the school going students, MBA, BBA, BCom, and all other people who need to know about the financial literacy. So see you tomorrow at 6 p.m. Good luck. Thank you.